so far. As Rick said, we're certainly watching the banks and profit season out of the way now, dividends and whatnot. So are we to expect it to see this kind of performance?
Firstly, I think it was a very negative day for the Australian share market. We did see some negative leads coming through from the US, but we saw heavy selling from the start, some strong volumes going through for a Monday. And I think a lot of the action was really at the index level, and this can be seen by where the selling occurred. We have a look at the top 20 stocks in Australia, down by 1.8%, so worse than the general market index. And then you have a look at the mid-cap index. That was only down by 0.8%, so less than half of what the blue chips were. And then the small cap index only down by 0.6%. And that points to a lot of index-based selling, which points to macro factors driving that selling on the Australian market. Now, if we have a look at what's occurring on the macro level, it is very much central bank expectations. And on one hand, there's a possibility that the Reserve Bank is going to cut interest rates tomorrow. And then on the other hand, you're facing the possibility that the US Federal Reserve will raise interest rates in December. And let's just say both of those occurred. Well, which one's going to have the bigger impact on market? It's obviously the US Federal Reserve and the raising of US interest rates, and that would lift lending rates all across the globe and become it more expensive to borrow money and to also also in terms of growth. And of course that would have a big impact in terms of the high yielding areas of the market, because there would be a higher cost for those areas of the market. So if we have a look at those high yielding areas of the market, like the banking space, like the telecom space, and like the consumer stable space, well, these were the three worst performing areas on the market. On the flip side, I think investors have become used to the outperformance of certain smaller growth stocks on the market. For example, we've seen St Barbara Mines up 1,100% in the year today. We've seen we've seen Bellamy's up by around about 400%, and we've seen Blackmore's up by 380%. So I think the stock pickers are still quite active in the smaller end of the market, but on an index level, I guess we saw heavy selling then there, and it's really being driven by macro factors. So on the smaller mid-cap then, lots of interesting things happening. For example, we did see a high for iProperty, not surprising given that takeover, but Billabong also saw a 52-week high. And then we saw all-time record highs for AP IGA, IPH, as well as BT Investments. So certainly a lot happening outside of just the index performance, but unfortunately the index performance was pretty bad today.
Yeah, it was. The Westpac chief, he did acknowledge, look, return on equity is falling. Is that a concern?
It is, absolutely. Well, I mean, it's always a concern.
Yeah.
But I don't think it's fresh news, that's the point, and I think it's sort of factored into current prices pretty much.
All right, Julia, I want to go to you and ask whether you think if we do see a cut from the Reserve Bank, if we're likely to see that passed on. I've been reading lots of commentary today from different banking analysts. CLSA banking analyst Brian Johnson, who's been doing this for a long time, says he expects about 20 basis points or so to be fed through. Hartzer wouldn't be brought in on that discussion earlier today. No surprises there. What do you think?
I think about 15 to 20 basis points will be passed on, given the capital situation that the banks have been in and will continue to be in, and I guess in terms of the property market as well, potential slowing there. I think in terms of the three banks that have reported, there haven't been any huge shocks and surprises. It's not information that we haven't known. Generally, it's been on expectations. We know that that the domestic banks like Westpac very much have their business banking as well as their retail banking, which is powering along things. But I think the bigger question has become, well, what are these banks going to look like in 12, 18 months down the track? And first of all, there are the macro conditions. So if we do see the US raising interest rates, then the costs to the banks will also rise because they borrow most of their money offshore as well. And I guess if we have a look at what may happen in terms of the Reserve Bank, that's a consideration. But then the housing market is an important one as well. And here in Sydney, what we've seen over the weekend is a slowing in terms of the auction clearance rates. And we've seen that for a number of weeks now. So a slowing housing market is especially of a concern to those domestically focused banks, especially Commonwealth Bank and Westpac. And that's where you saw a lot of the big losses being centred. So I think a combination of factors, seeing that selling in banks, first of all, what's happening happening on the macro level, especially what would happen in terms of the US Federal Reserve's raising interest rates, is a very strong headwind for bank share prices at the moment. And then secondly, what's happening in terms of housing, especially in Sydney, which is a core market for many of the big banks, especially for Commonwealth and Westpac, also having an impact on pricing at the moment.
Yeah, Scott,